Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. APEC has wrapped up, and with it came a major breakthrough for South Korea. Seoul and Washington reached a long-delayed tariff agreement after 3 months of tense talks. The deal includes $200 billion in Korean investment to the U.S. in cash and capped annually, a move aimed at reducing market uncertainty. Auto tariffs were lowered to match those for Japan and the EU, but steel was left out, still facing a steep 50% rate. Now, while the government touts the agreement as a win, concerns remain over investment risks and long-term returns. To take an expert's view on the latest achievements, we invite Shin Se Don, professor of business economics at Sookmyung Women's University. A big welcome.
My pleasure.
And also joining us online is Kim Mok-yeon, associate professor of economics at Yonsei University. Thank you for joining us, Professor.
Thank you for having me.
So let's start our discussion with Professor Shin. One of the key economic outcomes, of course, tied to the APEC summit was the dramatic conclusion of the South Korea-U.S. tariff negotiations. And the government says this helps reduce economic uncertainty. I wonder what's your evaluation of the overall outcome of the deal?
Well, it was quite a surprise because no one has expected such a dramatic agreements could be made, just a few hours ago. I mean, before the summit meeting, everybody was expecting that there will be no agreement between the two summits. In that sense, dramatic conclusion was sure to reduce the uncertainty about the trade environments between Korea and the United States on the one hand, or also more specifically, United States reduced the reciprocal tariff from 25% to 15%. So I think it is a pretty commanding feat of success for Korea. So in that respect, it is not just a step toward reducing uncertainty, but I think it was a giant step forward for Korea-U.S. trade relationship. So in that respect, I think it is quite surprising and quite a commanding kind of success on the part of Korea.
Right. It definitely surprised many of us watching the summit. Now, let's take a focus on this timing of the latest deal. The South Korea-U.S. tariff negotiations, it had been dragging on and on for months. What about Professor Shim? What do you think led to this breakthrough happening just ahead of the APEC? And do you think the Moscow project worked as a critical leverage point this time?
Yes, I also think that the Moscow project could serve as a leverage for the talk. Most importantly, the share of the Korean shipbuilding firms is the second in the global market, following China, while that of the US is less than 1%. Because the US cannot rely on China to revive its shipbuilding industry, the US government really needs the help from Korean government. So Moscow is also important for the US because it's not just capital intensive, but it is also labor intensive. So it can boost the employment of the areas, so-called Rust Belt, that have been left behind the other areas for the last several decades, which support the current president in the US. And I believe that the Korean government utilized such a need in the US, and it seems to be well reflected in the investment fund, that more than 30% of it would be invested in the shipbuilding sector. Also, I think there are two push factors from the perspective of the US, because the current tariff policy becomes less and less popular in the US. And according to a very recent survey, only 1/3 of the US people support for the current policy in the US. And as a last factor, while the effect of the tariff on the inflation rate has been somewhat limited over the last several months, but it has been constantly pointed out that rising inflation due to the high tariff will be another important factor behind ahead of the U.S.
Right. So this timing was very important and will be a little bit strategic moving forward. Now, one of the most contentious issues was regarding the ratio of cash investment from Seoul's side. The two agreed to designate $200 billion of Korea's investment in the U.S. as cash-based, with a cap of $20 billion annually. Professor Shin, would you say this is a positive step in terms of foreign exchange market stability for Korea?
I think it is more than positive because $350 billion is too much for Korean economy to swallow. It is such a huge amount that could endanger integrity of Korean exchange market. And that's why Korean government has been very negative about accepting U.S. offer of $350 billion in advance cashment. And that I think is the most important reason why there couldn't be any agreement between the two summits. And in that respect, $20 billion cap for over 10 years annual subscription within the deal, I think is a pretty great compromise and a great reason for two summits be able to getting agreement. And $20 cap for annual subscription, I think it is manageable because Bank of Korea foreign reserve is about $400 billion, and assuming the 5% return, it's going to be about $20 billion a year. So $20 billion a year is kind of a manageable amount for Korean government, and I think that is why Korean government was asking United States to accept that offer, and finally Trump and his administration agreed to take that offer, and that I think is a great compromise.
Mm-hmm. So just as our Professor Shin has mentioned, the government plans to cover the $20 billion per year using returns from foreign exchange reserves. But I hear there's still a lot of concerns about this. What about Professor Shin? So if those returns actually fall short, what kind of concerns could they raise? And what kind of policy safeguards should the government put in place to address this kind of risk?
Yes, so if it so it might result in the financial crisis if the return would be far short of the payment, because the exchange rate might skyrocket if the Korea government failed to pay. But as Professor Shin just pointed out, which I also fully agree with, the Korean government has enough kind of fund, which is in terms of the foreign reserve exchange. And if we expect the average return from that kind of deal set, so the Korean government has enough fund to pay for the U.S. government. And even in the case that the return cannot be really high because it's kind of the random, it comes from the random distribution. So there is a possibility that the return cannot be really that high to pay for that. But even for that kind of case, I think the government still has a room because it can issue the bond or the debt so that it can use that fund to pay for the U.S. So one might argue that the rising government debt level is kind of worrisome, and it's still true. But if you look at the data, the government debt to GDP ratio is still lower than 50%. So this is not that high compared to the level that we had 10 years ago, but it's much lower than the other advanced economies like the US, UK, or Japan. And so I think there is still a room for the government to issue the debt, and also it can adjust its spending accordingly so that it can really handle the issuing the debt to pay for the U.S.
Mm-hmm. So this latest agreement gives a little bit more room for Seoul to maneuver. Now, moving on, so this memorandum actually includes a clause specifying that only, quote, commercially viable projects will be pursued to increase the chance of principal recovery. Professor Shin, what kind of standards or processes will be used to judge whether a project is actually commercially viable. And do you think this clause can actually serve as a kind of a safety net?
Well, nobody knows for sure because we don't have detailed, written stipulation in the final text. But so far, we understand that Korean stance is that it's got to be commercially viable, which means that it has to provide proper rate of return, or we could call it profitability. I think so. Profitability is the first most important element of judging commercial viability. And second, I think element is that we have to be able to control or manage risk in that investment. So the risk management is also a very important, aspect of commercial viability. And third, I think the investment should be able to maintain sustainability. So the rate of return, the risk management, and the sustainability, I think those are three most important elements of judging, commercially viability.
Right, a very helpful reminder for us. So profitability, managing risks, and being sustainable. That could be a good criteria too. Meanwhile, the auto tariffs, actually, it has been reduced from the 25% to 15%. Now it's aligned with the levels set for Japan and Europe as well. But some people argue that this still is a disadvantage compared to the past rate of 0. So Professor Shim, from the perspective of Korea's auto industry competitiveness, how would you assess this?
Yeah, it is definitely true that it is less favorable than what the automobile industry has to pay earlier under the previous tariff rate regime. But the thing is that the most important thing in the global market is the price competitive, the relative price between the other countries. So if in terms of that, it should be fine, because if you think about the other countries, let's say Japan, which is the most important competitor in the US market, this does not seem to be that bad. So the tariff rate on the Japanese cars was also low at 2.5%, which was also near 0 before the current regime begins. So it seems that 50% change does not seem to be that bad, in the sense that the Japanese car also faced 12.5% change in the tariff rate, because if the price is the only factor for capping the competitiveness in the US market, the Korean car makers can absorb some of the changes in the price level by lowering its margin. And if we look at the recent news on the revenue and its profitability of the Hyundai Motors and in the US global market, in the US automobile market, it seems to have improved even under the pressure of the tariff and trade uncertainty. The market share has increased to 6.3%, and its quarter revenue was remarkably high. So it does indicate that the competitiveness of the car makers, the Korean car makers in the US, does not seem to be that harmed by the new tariff rate.
Right, so not that bad for a specific industry that's highly competitive globally. Now, let's move on to steel exports. So it's facing a high 50% tariff. Professor Shin, what realistic response strategies can South Korea's steel industry adopt under these conditions?
Well, on the 50%, Section 232 tariff, what we call it a security tariff. It's going to be very difficult for any country, and not just Korea, but any country exporting steel to the United States. So for Korean steel manufacturers, they should find other outlets such as European Union or Southeast Asia. But there are many competitors like China, Japan. So in short, I think it's going to be very difficult for Korean steelmakers to export. Then the proper strategy should be that they have to find the domestic market because Korean domestic market has been imported, a substantial amount of steels from cheaper countries like China or Brazil. So we have to be able to maintain competitiveness against the Chinese and the Brazilian steel makers to dominate domestic market. So first target should be we have to focus upon domestic market, and secondly we have to have enhanced level of quality and the level of productivity to effectively compete against the foreign counterparts in the future. So focusing upon domestic market on the one hand and enhancing the quality and productivity to effectively compete against the foreign counterparts. I think those two are most important strategy that Korean steel makers have to follow down the road.
Thank you for that, Professor Shin. So it seems like it's going to be quite a chaotic time for the nation's steel industry. But as for semiconductors, the government said it has secured terms that are equal to Taiwan's, but the U.S.-Taiwan negotiations are quite still developing. So, Professor Shin, what kind of variables could actually shift South Korea's position before the final terms are actually settled?
So I can think of the two factors. So the first factor is that the relationship between China and US would be really important for making the deal between the US and Taiwan. If the relationship between US and China improves, then the US may put additional pressure on Taiwan, and so that it can affect the semiconductor firms. And the second factor is the dependency of the US semiconductor firms on Taiwanese firms. Let's say Micron, the US semiconductor production firm, also produces most of its goods in Taiwan and also in Japan. So most of the firms are really affected by the higher tariff that the US government now puts on most of the countries, implying that such a high tariff on the memory chips cannot really improve the US economy, but it only raises the overall price level in the US. Because memory chips are now ubiquitously used in most of the manufactured goods, it will further raise the price level of the other goods in the US. And as I pointed out earlier, it can potentially increase the price level in the US as well as the other countries. So it will be an important threat for the US economy. So this long-run economic factor might prevent the US government to put too high tariff on Taiwan if it endogenizes such an effect.
Exactly. So until Taiwan's terms are finalized, there's still a lot up in the air. Now, lastly, before we leave you both, we actually cannot leave out NVIDIA CEO Jensen Huang's visit. Of course, it was the hot potato of the time. South Korea's acquisition of 260,000 NVIDIA GPUs, essential for AI development, is being hailed as a major win for the country. Professor Shin, so alongside this supply deal, what kind of ripple effects could stronger NVIDIA Korea partnerships have on boosting the nation's AI competitiveness?
Well, first of all, Korean government realizes that the AI competitiveness is most important for Korean economic development in the future. So first, the government is very strong in supporting AI industry. That is the fundamental fact. And now, NVIDIA requires and needs most effective and most productive chips made from Korea. So NVIDIA wants and needs Korean firms like Samsung and SK. And also, Samsung and SK requires potential buyers of their chips. So there's a pretty good room for mutual cooperation between, NVIDIA and Samsung and SK. So on top of it, I think the Korean government's, strong support will make everybody winner. Korea, Samsung and SK and also NVIDIA is going to be a final winner. So I am very hopeful that, this kind of a project and the co-relationship between NVIDIA and the Korean companies, I think that, is going to direct the Korean economy for the next generation as, semiconductor about 40 years ago has been directing Korean economy for the last, I think, 4 decades. So I'm pretty hopeful and I'm pretty positive about the future of Korean AI industry strength.
Right, definitely. It was a very big move, and it really showed how seriously Korea is taking the AI race, and we'll be looking forward to the bright prospects of that beyond APEC. And we'll have to wrap up our discussion right here. Thank you so much for your time and for your insights, Professor Shin Se Don.
Thank you.
And Professor Sookmyung, thank you so much. We appreciate it.
Thank you.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.